You get paid and your money is already spoken for. Not by your bank, by you. Here's why that timing gap costs you thousands a year. Most people think about income in one direction. The paycheck arrives and then you decide what to do with it. Pay bills, spend on things you want, save what's left. That's the default mental model, but there's a structural problem embedded in that sequence. Your obligations don't wait for your paycheck. Your rent is due on the 1st. Your insurance premium hit your account 3 weeks ago. Your car payment, your subscriptions, your student loan, they've all established themselves as claims on future income before you even see the deposit. You're not making allocation decisions with a clean slate. You're making them in arrears, trying to fit discretionary spending into the gaps left by commitments you made in the past. That's not a budgeting problem. That's an architecture problem. Let me show you how this actually works with real numbers. Say you earn $60,000 a year, $5,000 gross per month. That $5,000 never touches your hands. Taxes take roughly $800. That leaves $4,200. But before that $4,200 exists as a real choice, your obligations are already queued. Rent or mortgage, $1,400. Insurance, health, auto, renters, $350. Utilities, $150. Student loan or car payment, $400. Subscriptions you forgot you had, $80. That's $2,380 committed before you've made a single discretionary decision. You have $1,820 left, but you haven't eaten, you haven't filled your gas tank, you haven't bought toilet paper or replaced a broken phone screen. In reality, your true discretionary surplus, the amount you can actually redirect toward building wealth, is closer to $400 to $600 per month. That's $4,800 to $7,200 a year. Here's the structural insight. You're not actually deciding whether to save that $4,800. The timing of your obligations has already decided for you. You're just ratifying the decision by default, then wondering why you can't seem to get ahead. The people who do get ahead reverse this. They don't wait for the paycheck and react to obligations. They pre-commit to the discretionary allocation, the $400 to $600, before the paycheck even clears. Automated transfer to savings on day one. Then the remaining $4,200 flows into the obligations and the rest. The paycheck still doesn't arrive early. But your decision does. The fix is mechanical, not motivational. On the day you're paid, immediately move your target savings amount to a separate account you don't use for daily expenses. Then work with what's left. This isn't about willpower or discipline. It's about changing the sequence so that your best decision gets made first, not last. You're not making your money work harder. You're making the order of your decisions work better. Your paycheck arriving late isn't a timing issue, it's a sequencing issue. Reverse the order and the math changes. Follow for more grounded takes on how money actually works. Disclaimer: not financial advice, educational only.